Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 29th, 2025, and we're diving into Hess's fourth quarter earnings report for 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Hess has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the financial highlights. Hess reported a net income of $542 million, or $1.76 per share, for Q4 2024. This is a significant increase from the previous year's $413 million, or $1.34 per share. John, how does this compare to the analysts' expectations?
Hess has indeed outperformed expectations. Analysts were forecasting an EPS of 1.51 cents, and Hess delivered 1.76 cents. This beat is largely attributed to increased production volumes, particularly in Guyana and the Bakken, despite facing lower realized selling prices and higher exploration expenses.
And what about their revenue?
Hess reported total revenues and non-operating income of $3.225 billion, up from $3.035 billion in the same quarter last year. This growth is driven by higher production levels, which we'll discuss further in the next segment.
Production and operational highlights. Production seems to be a key driver for Hess this quarter. Can you elaborate on their operational performance?
Absolutely. Hess's oil and gas net production reached 495,000 barrels of oil equivalent per day, an 18% increase from the previous year. Guyana was a standout, with production surging 52% to 195,000 barrels per day, thanks to the startup of the Payara development. The Bakken also saw a 7% increase in production.
And what about their capital expenditures?
Hess's exploration and production capital expenditures were $1.677 billion, which includes significant investments in floating production, storage, and offloading vessels. This indicates their commitment to expanding production capabilities, particularly in Guyana.
Financial health and liquidity. Let's shift focus to Hess's financial health. How are they positioned in terms of liquidity and debt?
Hess maintains a solid liquidity position with $1.2 billion in cash and cash equivalents. Their debt stands at $5.3 billion, resulting in a debt-to-capitalization ratio of 28.3%, which is an improvement from last year's 33.6%. This indicates a stronger balance sheet.
And their cash flow from operations.
Net cash provided by operating activities was $1.312 billion, slightly down from $1.344 billion last year. However, when excluding changes in operating assets and liabilities, cash flow actually increased, reflecting higher production volumes.
Future outlook and strategic initiatives. Looking ahead, what can we expect from Hess in terms of strategic initiatives and future outlook?
Hess has a robust outlook, with proved reserves estimated at 1.44 billion barrels of oil equivalent and a reserve replacement ratio of 138%. They plan to invest approximately $4.5 billion in capital and exploratory expenditures in 2025, focusing on key projects in Guyana and the Bakken.
And there's a significant corporate development on the horizon, right?
Yes, Hess is in the process of merging with Chevron, which could create substantial synergies and enhance their operational scale. This merger is a strategic move to strengthen their position in the global energy market.
Key takeaways. In summary, Hess has delivered a strong performance in Q4 2024, with significant production increases and a solid financial position. The pending merger with Chevron adds an exciting dimension to their future prospects. Thank you, John, for your insights.
Thank you for having me. Hess's strategic initiatives and operational efficiencies are certainly positioning them well for the future.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Hess's performance in the comments below.